Welcome back to Market on Close. I'm Marley, Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. We'll close out our show with our final thoughts like we usually do. Today's session, AI was a big theme. Apple changing out its head of AI. Sam Altman reportedly sounding an alarm for Code Red. Mistral releasing some new models. So let's break down some of those stories. At Apple, the current head of AI is retiring and being replaced by an AI veteran with a history at both Microsoft and Google, where he was the head of engineering on Gemini. Then we had Sam Altman reportedly sending out an internal memo outlining what was called a Code Red effort to improve ChatGPT. The information also reporting that OpenAI will be prioritizing these ChatGPT improvements over making other investments in areas like health, shopping, and advertising. Then we had French AI startup Mistral releasing a new suite of models to some heavy praise as it looks to keep pace with Google, OpenAI, and DeepSeek. Mistral's release includes a large model, which it says is, quote, the world's best open weight, multimodal, and multilingual. This follows Google's successful Gemini 3.0 rollout and DeepSeek's recent model release. AI continues to be this story, Sam, but we're hearing so much about these chatbots and their use, even surrounding the shopping season, with how heavily they were used on Black Friday and on Cyber Monday as well. What caught your eye during the session today?
Yeah, well, I've been speaking to a lot of the fixed income guys over at Charles Schwab, and I think, markets continue to keep one eye on AI, but also another eye on things like Japan, with those government bond yields that are remaining elevated as well. The 10-year JGB yield at its highest since 2008, while the 30-year hit an all-time high of 3.411. It comes off the back of those hawkish remarks from the Bank of Japan governor this week, which has increased the bets of an interest rate hike this month. Now, the reason U.S. investors are paying attention to that is because the potential for rate increases in Japan has weighed on the yen carry trade, a popular strategy used to buy riskier U.S. assets like tech and crypto. Now, both stabilized today. That is notable. But as Colin Martin pointed out to me, even with the Fed cutting rates, the expectations is that the U.S. 10-year yield will likely stay around that 4% level, and that's because high yields in Japan can play into the valuation of U.S. treasuries by looking more attractive and potentially pulling bond investors away from the U.S. But heading into tomorrow, Marley, what will you be looking out for?
More retail earnings are coming our way in the morning. They'll give us some more insight into this bifurcated economy that we have and consumer spending trends. We've got Macy's coming up, expecting revenue of about $4.53 billion for the third quarter. That would be a roughly 3 to 4% drop year over year. Earnings per share estimated to be about a loss of 14 cents, marking a sharp decline from last year. Comparable store sales will be a key metric here, as well as inventory levels and, of course, the outlook for their holiday season and 2026. We'll also hear from Dollar Tree before the open. Their EPS expected to be about $1.08 on revenue of about $4.7 billion. So two very different retailers there, but, a potential look into the higher end consumer, the mid-level consumer, and the lower income consumer there with these earnings. And on the heels of American Eagle now popping more than 10% after they issued some really bullish holiday guidance and raised their full year forecast on some better than expected earnings just now. Sam, how about you?
Well, speaking of the consumer, we're going to be looking at services PMI numbers. We'll get the S&P Global at 9:45 Eastern and then ISM at 10 o'clock. Now, this carries more weight than the manufacturing data that we got yesterday, as services makes up for more than 2/3 of the U.S. economy. Expectations are for a reading of around 52 or so for the ISM, which is above that 50 mark that separates expansion from contraction. In October, the ISM services rose to 52.4, which was an 8-month high. Important sub-gauges to look out for are new orders, which surged last month, employment, which has been softer, and those input prices, which have been rising. Now, that is obviously not something you want to see, because those input prices do suggest that there are inflationary pressures building. So you do want to see that employment gauge ticking up and some of those input prices also coming down. But this will be a really good gauge of where things are at as far as services, as we do, of course, continue to pass over more data, which will no doubt factor into that FOMC decision come next week, Marley.
Certainly will. And before we say goodbye, I just want to check back in with where some of those companies we got the earnings from are doing right now. Okta still trading down more than 2.5%. Marvell trading down 5.5%. CrowdStrike is up about 0.5% right now. And I just mentioned American Eagle. They are up 12.5%. But that is going to do it for us on Market on Close.